Have you ever stopped and wondered where a company's money actually goes? I'm not talking about the giant abstract numbers you see on a spreadsheet. I mean, what happens to the actual cash from a single sale you make or a product you help build? Today, we're going to follow that money on its secret journey. And I promise you, what we find is going to completely change how you think about your job every single day.
All right, let's start with something super simple. Picture this. You walk into a cafe and buy a nice cup of coffee for 50,000 dong. That money goes right into the cash register. But think about it. After paying for everything, the beans, the milk, the barista's salary, the rent for the shop, how much of that 50,000 dong do you think the company actually gets to keep as pure profit? Go on, take a guess. 30,000? Maybe 20,000? Lock in your answer.
You ready for this? The answer is just 8,000 dong. That's it. From a 50,000 dong sale, only a tiny fraction is left over. So the real mystery, the one we're here to solve, is where in the world did the other 42,000 dong just disappear to?
To find that missing money, we need to follow it down something called a P&L statement. P&L just stands for profit and loss. Now, the easiest way to picture a P&L is to think of it like a waterfall. We start with this big pool of money way up at the top, right? And as that money flows down, it hits different rocks and ledges, and it loses a little bit of water at every single step. So let's follow our 50,000 dong as it takes the plunge. Okay, so the very top of our waterfall, that big initial pool of water, is called revenue. That's the full 50,000 dong that the customer hands over. And, this is where the first big misunderstanding always happens. If you're in sales, you might high-five your team and say, "We just made the company 50,000 dong." But that's not really money we can spend yet. It's just our starting point. So our waterfall has three huge drops where the money is going to shrink. First, we have to subtract the cost of making the actual coffee. Then we subtract the cost of just running the whole cafe. And finally, whatever is left, we still have to pay the government and the banks. Let's break it down, step by step. The very first leak in our waterfall is something called COGS. It sounds kind of technical, but it just means cost of goods sold. These are the direct physical costs to create the thing you're selling. For our coffee, that's obvious. It's the coffee beans, the milk, the paper cup, the lid, the straw. If you don't pay for these things, you literally have no coffee to sell. And in our case, all that stuff costs 15,000 dong. Okay, so here's our first bit of math. We take the 50,000 in revenue, we subtract that 15,000 in COGS, and that leaves us with 35,000 dong. This number is called our gross profit. Now, it's an important number, for sure, but we're not done, not even close. This is just the profit from selling the coffee itself, before we pay for, everything else it takes to run the business. And that brings us to the second, and honestly the biggest leak in the whole waterfall, Opex, or operating expenses. This is all the money you have to spend just to keep the lights on, stuff that isn't directly part of the coffee. Think about it. The rent for the cafe, the electricity bill, and of course the salaries for everyone who isn't making coffee, the folks in marketing, HR, accounting, all the managers. For every single cup of coffee sold, 25,000 dong has to go toward paying all those bills. So let's take the next step down the waterfall. We had our 35,000 dong gross profit. Now we subtract that huge 25,000 chunk for operating expenses, and that leaves us with just 10,000 dong. This is called our operating profit. It's the money we made from our main business. We are getting so close to the bottom, but there's one final little drop. Okay, so after we subtract a final 2,000 for things like taxes and interest on loans, we finally arrive at our 8,000 dong net profit. And you're probably thinking, great, the company has 8,000 dong in cash to spend now, right? Well, here it is. Here's the biggest plot twist in all of business, the one that messes with almost everyone's head. That 8,000 dong in profit is not the same as 8,000 dong of actual cash in the bank. And believe me, understanding that one little difference is everything.
Let me make this super personal. Let's say your salary is 20 million dong a month. On paper, you're profiting over 600,000 dong every single day. You're doing great. But what's the reality on the 25th of the month? Your rent is due, but your bank account is empty because you don't actually get paid until next week. See the problem? On paper, you are profitable, but in reality, you are out of cash. And a business is exactly the same way.
And that brings us to the most important rule in business. Profit is just an idea. It's an accounting concept. Cash is the oxygen a company breathes. A company can be posting record profits on paper, making headlines, but if it runs out of cold, hard cash to pay its employees, its suppliers, and its rent, it will go bankrupt. Period.
So, if profit isn't cash, then where does all the cash go? Well, it gets sucked into what I like to call financial black holes. There are these three main places in a business that can just vacuum the cash right out of the bank account, even if the company is technically profitable.
The first black hole is accounts receivable. It's a fancy name for a simple idea. You sell something, but you let the customer pay you later. Imagine you're a big company and you send an invoice that's due in 60 days. The moment you send it, you can book a profit on paper. But for 2 entire months, you have absolutely zero cash from that sale. The money is just sitting in your customer's bank account, not yours.
Black hole number 2 is inventory. This is when the company uses its real cash to buy raw materials or to make a whole bunch of products. That cash is now basically petrified. It's turned into boxes of stuff just sitting in a warehouse, collecting dust. And here's the thing. You can't pay your employees' salaries with boxes of unsold goods. That money is totally trapped until someone actually buys the product. And the third black hole is called capital expenditures, or capex for short. This happens when the company spends a huge pile of cash all at once on a major asset, like a brand new 500 million dong computer system. Now, the P&L statement, our waterfall, might spread that cost out over 5 years for accounting reasons. But the cash is gone today. 500 million dong instantly vanishes from the bank account.
Okay, I know this all might seem kinda high level. P&L, capex, whatever. So how does this actually connect to your job? Let's bring this all the way back down to earth, to a single, tiny, everyday action and see the massive ripple effect it can have. Let's talk about something as simple as a broken cup.
So imagine an employee is working and, oops, they accidentally drop and break a coffee cup. It's a nice cup. It costs 80,000 dong to replace. And the natural reaction from everyone is, oh well, it's just 80,000 dong. For a big company, what's the big deal? But now that we understand how profit really works, we can calculate the true, staggering cost of that one little mistake.
So here's the question for you. To make up for that 80,000 dong loss from the broken cup, how many more 50,000 dong coffees does the entire team need to sell? Just think about it for a second. Remember, the profit on each cup is only 8,000 dong.
The answer is 10. 10 more coffees. Just let that sink in for a moment. To cover the cost of one small, careless mistake, the team has to go out and make 10 brand new sales. And this, right here, is the absolutely devastating math of thin profit margins. The entire team, from the marketing people who get customers in the door, to the baristas, to the servers, has to work to generate 10 brand new sales, which brings in 80,000 dong in profit, just to get back to zero, just to break even on that one broken cup. Suddenly, that little mistake feels a whole lot bigger, doesn't it? And this is exactly how it all connects back to you. It doesn't matter what your role is, you have direct control over one of the key levers in this entire waterfall. Are you in sales and marketing? You own revenue, the very top line. Are you in production or purchasing? You control COGS, that first big leak. Are you in admin, HR, or IT? You control Opex, the biggest leak of them all. Every single job in the company directly impacts that final bottom line. And that leaves us with one final thought. I want you to look at what you're doing today at your job. Think about your next email, your next purchase order, your next decision, whatever it is, and ask yourself this. Is this action helping the company save a dong of cost or maybe earn an extra dong of revenue? Or is it, no matter how small, the equivalent of breaking a cup, forcing everyone around you to work harder just to sell 10 more coffees so we can all stand still? That right there, that's business acumen. And now you've got it.